Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is not important, and I'm your host. Let's get into it. The FDIC asks signature buyers to stop all crypto business. What that means, guys, is they're telling whoever's looking at buying or purchasing Signature Bank because they shut it down, that if they do buy it, they have to stop all crypto business. If you didn't think this was an attack on crypto, now you have the absolute truth. Next, Federal Reserve confirms July launch for FedNow instant payment service. The feds are coming out with their own instant payment service. What do we call that? Sounds like a CBDC to me. All right, US credit crunch means it's time to buy gold and Bitcoin. Last time I spoke to you guys, I told you this is what me and my lady are looking at doing because things are weird. I don't know what else to do. So let's go ahead and look at the market. Market cap sitting at 1.082 trillion. Bitcoin dominance is continuing to creep up. We are now at 44.5%. Getting our way up to 50%, guys. Do I think we'll get to 50%? Probably not. Maybe 48. I'm feeling it as people start to pull out of banks. ETH dominance 18.8% and 24 away for an ETH transaction. Bitcoin up a little over 14.5% on the week. We've gotten some slight pullbacks, but we're warring with that 25 again. Some people think it's going to roll over. Some people think it won't. We'll get into that in a second. Outside of that, we're kind of flatlining right now across the board after the pullback we had. I think it was yesterday. Yeah. And guys, I apologize for not being here yesterday. I had to go do regular life stuff. I had to go work my regular life job. Unfortunately, that's what happens when you're just some random dude in a room doing YouTube. All right, let's look at Bitcoin. This is the hourly. After that extraordinary pump up past 26, how high did we go? What is it right here? We got to a little over 26.5. Let's just call it 26.5 to make it even, which is a nice psychological number. Let's put a line at 26.5. Oop. Hold on. Sorry, guys. I got shaky hands today. Yeah, we'll call it 26.5. Pumped a little bit above it, but not too high. But then we pulled back to my 26.209 level, and then hit that a couple of times, and then fell. Now here's where and this is only the hourly. Of course, this is kind of a shorter time frame. But guys, I got really bullish here for a second because, like I told you, if we could turn 25 into support, we're off to the races. That has been that level that we've all been looking at. Everyone in the market is talking about it. If we flip 25 from resistance to support and hold, we're off to the races. 30 is the next target. But we couldn't. It looked like we were going to. I got a little bullish, and then it dumped. And then once again, we started knocking on that door, beating our heads against that ceiling. Came back down to that infamous 23.876 level. Started coming back up. And again, right now, when I woke up this morning, it looked like we were going to pump. Got a little bit above it, came right back down. And we're just fighting 25, guys. Let's look at it on the 4 hour. That's what it looks like on the 4 hours telling the story, y'all. Looks like I hate to say it, this looks like a crazy bull trap right there. But outside of that, guys, I'm not going to spend too much time trying to predict what Bitcoin's going to do right now because there's a lot of unknown variables out there. With all the bank stuff, with what's the Fed going to do at the end of this month, if they're going to continue rates or continue raising rates, not going to continue raising rates, etc., etc. Again, potential range right here for now. But if you are, if you are dollar cost averaging, I don't think this is a bad, anywhere from this 23 to 25, this 23, well, let's just call it 24. 24 to 25, it's not a bad place to get in. I'm not saying go all in by any means. But for example, let's say I had 20 grand and all I want to do is buy Bitcoin. Personally, I would throw probably, 2,500 in here. Wait to see if it breaks and holds 25. If it does, I'll throw another 25 in. But if it does roll over and breaks this 23,876, let's just call it 24 to make it a simple number. If we break this, I would start stacking buy orders all the way down and just trying to fill those buy orders with my 20 grand. So whether you're hitting levels and setting buy orders, or you're just dollar cost averaging every couple of weeks, things like that, I think that's still a good strategy if you're not like openly doing swing trades or day trading or whatnot. That's where my head's at, and that's probably what I'm going to be doing, because I don't trust my money in the bank right now, and I don't have a ton of it, and I'd like to keep as much as I've got. Just weird times, guys. All right, moving on to ETH. ETH looking exactly the same. Hit this 1775, came back down, looked like we were going to range and hold this 1698. We'll just call it 1700. And then rolled over, bounced off the top of the purple box that I showed you guys, that I figured we were going to range in for a while before we tanked down. Bounced V-shape, bounced right off of it, and now we're fighting with this 1662 level, which was support back here, resistance back here, resistance. So I think that's a good strong level to see if we can hold above this 1662. We're above it right now. If we can hold and turn this back into support, there's potential for more upside. That's what I'm looking at. That's what I'm seeing. Yeah, not a lot on the RSIs or anything like that. All right, that's it, guys. Though, but per usual, this is not a trading channel. I am not a financial advisor. This is not financial advice. Crypto is heavy volatile. Trade your own risk. Yeah, all the things. All right, let's go on the news, guys. I'm gonna give you what I found this morning, the most relevant articles to what's going on with the banks. And this weird poopy economy we're in right now. FDIC asks signature buyers to stop all crypto business. The FDIC regulators have reportedly required all buyers of Signature to agree to give up all cryptocurrency business at the bank. Yeah. What? All right, the United States Federal Deposit Insurance Corporation, the FDIC, has reportedly asked potential rescuers of some failed U.S. banks to not support any crypto services. The FDIC regulators have asked banks interested in acquiring failed U.S. lenders like Silicon Valley Bank and Signature Bank to submit bids by March 17th, which is tomorrow, Reuters reported. The authority will only accept bids from banks with existing bank charter, prioritizing traditional lenders over private equity firms, which tells me that this is a consolidation of banks, man. The big banks are trying to eat up little banks. Yeah. And I know I keep saying this is orchestrated, but if it's not obvious, dude, this is obvious. To me, it is, at least. Like a monopoly of banks. Citing two sources familiar with the matter, the FDIC aims to sell entire businesses of both SVB and Signature, while offers for parts of the bank could be considered if the whole company's sales do not happen. The FDIC has also required a buyer of Signature, now mind you, Signature, one of the biggest crypto-friendly banks out there, that they shut down and didn't even say why. They just shut it down. The FDIC has also required any buyer of Signature to agree to give up all cryptocurrency business. Literally, what the fuck? Like what? New York-based Signature Bank is a major crypto-friendly bank in the United States. The bank is known for many partnerships in the crypto industry, servicing companies like Coinbase Exchange, stablecoin issuer Paxos Trust, which are all being attacked right now. USDC, Paxos, who's the issuer of BUSD, crypto custodian BitGo, and bankrupt crypto lender Celsius, among others. These are all recently been attacked. Sorry guys, this looks orchestrated to me. Big swinging well, of United States monetary government. The news comes amid U.S. Representatives Tom Emmer sending a letter to the FDIC expressing concerns that the federal government is weaponizing issuers around banking industry to go after crypto. Of course they are. These actions to weaponize recent instability in the banking sector, catalyzed by catastrophic government spending and unprecedented interest rate hikes, are, I don't know if I'd consider that unprecedented. We had like 8% inflation or something like that. Anyway, are deeply inappropriate and could lead to broader financial stability, Emmer said in the letter to FDIC Chairman Martin Gruenberg. And there it is, if you want to go follow Tom Emmer and read. The New York State Department of Financial Services officially closed down and took over Signature on March 12th, appointing the FDIC as the receiver. To protect depositors, and the FDIC transferred all deposits and most of the assets of Signature Bank to Signature Bridge Bank, a full-service bank that will be operated by the FDIC as it marks the institution to potential bidders. According to Barney Frank, a former member of the U.S. House of Representatives, New York regulators closed Signature Bank despite no insolvency. Exactly. Frank speculated that the action was to demonstrate force over the crypto industry, being a very strong anti-crypto message. However, the FDIC in January said that it didn't prohibit or discourage banking organizations from providing banking services to customers of any specific class or type as permitted by law or regulation. Bullshit. Later reports suggested that Signature CEO Joseph DePaulo and Chief Financial Officers Stephen Wiermski allegedly committed fraud by falsely claiming the bank was financially strong. Just 3 days before it was shut down, the bank has also reportedly been investigated for alleged money laundering. This is the only other thing that I can think that if this is orchestrated, if this is, a legit reason for shutting the bank down, there are rumors in the space that they were committing money laundering fraud, and that's why they were shut down. But let's take a giant step back. If you think that any of the big banks aren't doing this, you're a fool. Sorry, it's the truth. All right, you guys, let me know what you guys think about this. To me, this looks like a completely orchestrated attack on crypto. To even come out and say that anybody who buys Signature must cancel all crypto business. I mean, how obvious can you be? Like, what? It's insane. I'm just, it's disgusting. It's insane. I'm over these people. I'm so over this. All right. Federal Reserve confirms, which is now, it's just so funny. Here's a story to just seal the deal, right? After all this nonsense, after all the banks falling apart, all this stuff that looks orchestrated against crypto, the Federal Reserve, right, confirms July launch for FedNow instant payment service. Come to the rescue. Here's our CBDC. Don't worry about crypto. You can do exactly what you would be doing with Bitcoin or Ethereum or anything else out there on our Federal Reserve platform. The FedNow service aims to reduce the gap in payment time between United States financial institutions. The United States Federal Reserve has confirmed a July launch date for its long-awaited instant payment system, seen by some as an alternative to central bank digital currencies and stablecoins. No, I think that's just what it's going to be. It's going to be their CBDC, or its infrastructure for it, maybe. The instant payment network will settle payments in seconds and can support transactions between consumers, merchants, and banks. It does not rely on blockchain technology. Okay. It's a significant step for the government as it is controlled by the Federal Reserve. Clearinghouse RTP Network, which also offers real-time payments, is operated by a consortium of large banks. According to a March 15th announcement, the U.S. Fed said the debut of FedNow is set for July, with the U.S. Treasury and a diverse mix of financial institutions of all sizes ready to use the network from launch, or they're forcing them to use it. The Fed said it will begin the formal certification of participants during the first week of April in preparation for the launch. So let's go back to what I was talking about with Bitcoin. If you guys are buying Bitcoin, I don't know how this is going to affect people basically trying to save their capital right now and going into Bitcoin as a hedge. If this is as legit as they say it is, there is a potential that people will, because of how fast this is and how simple it is, the transactions, etc., might get out of Bitcoin and get into this thing. That's the rumors I'm hearing, and I'm still trying to wrap my head around it. So it's something to think about. But this is why you don't just go balls deep in something. You spread up your buy orders or dollar cost average, etc., etc. That's what I'm getting at. I don't know if I read this or not. Early adopters will complete a customer testing and certification program informed by feedback from the FedNow pilot program to prepare for sending live transactions through the system. The announcement reads, FedNow was announced in 2019 and will provide around-the-clock, real-time gross settlement by funneling commercial bank money from a sender through a Fed credit account to its recipient. It also has built-in features such as fraud risk management. If you like bank runs in the age of social media, you're going to love bank runs in the age of FedNow. Following the official launch, the Federal Reserve outlined that it will push to onboard as many financial institutions as possible in order to increase the availability of instant payments. The launch reflects an important milestone in the journey to help financial institutions serve customer needs for instant payments to better support nearly every aspect of our economy. Tom Barkin, President of the Federal Reserve Bank of Richmond and FedNow Program Executive Sponsor, said in the announcement. Some see FedNow service as tackling a problem that both stablecoins and CBDCs also seek to solve. The FedNow program, however, doesn't use blockchain tech, while the Federal Reserve is known to have a cautious and skeptical view on stablecoins. The Fed is doing its own version of SEN Signet. Curious to see how this plays out. One of the major banking payment rail services, U.S. crypto companies in the Silvergate Exchange Network, SEN, was shut down earlier this month following Silvergate's collapse. Interesting. As it stands, SEN competitor Signet from Signature Bank is still operational despite the bank's force. So this is what I'm talking about. They're shutting down all of these rail systems that are doing, from what I'm reading, if I'm reading this correctly, and I like to think that I am, they're shutting down all these rail systems that were doing what they say FedNow is supposed to be doing. Crazy, guys. However, its fate is up in the air, while a number of companies have reportedly fled from the network following Signature's troubles, which makes sense. Exactly what I'm saying. Let me read these. I don't usually read tweets, guys, but FedNow works with the private sector, so not really following your response. The private sector will also add layers to domestic payment systems with upgrades to the international settlements capabilities. Without the private sector, none of this exists. Damon Nam, exactly. Silverbank and Silvergate Exchange network. Signature had Signet. Both were private networks for companies to transfer value between each other using digital assets. Where are both now? These companies enabled alternative currencies that threaten a CBDC and a FedNow. This is what I'm getting at. FedNow could also stand in place of a central bank issued digital currency, which is so funny because they were pushing for it, and if they're going to go this opposite direction, nothing's changing, guys. It's all the same bullshit. The Federal Reserve Vice Chair Lael Brainerd, Lamelin, emphasized during a House of Representatives Committee on Financial Services hearing in May that a CBDC would take far longer to get off the ground than FedNow due to regulatory hurdles. If Congress were to decide to issue a central bank digital currency, it could take 5 years to put in place the requisite security design features, she said. She added that FedNow will serve many of the same functions as a CBDC anyhow. They're pivoting. Fed Chair Jerome Powell also spoke before the House of Financial Services Committee on March 9th and suggested that a potential U.S. CBDC is still quite some time away. We're not at that stage of making any real decisions, he said, adding that what we're doing is experimenting in kind of an early stage experimentation. Okay. How would this work? Does it work? What's the best technology? What's the most efficient? Commenting on FedNow, however, he stated that we'll have real-time payments in this country very, very soon. I don't know, guys. All this stuff's starting to look really, really shady. I'm not a conspiracy theorist kind of person, at least I don't think I am. But it just looks orchestrated. It looks shady. Let me know what you guys think. Comments down below. All right, y'all. Final story before I get you out of here. U.S. credit crunch means it's time to buy gold and Bitcoin. I think it was Tuesday or Monday. I was telling you guys this is kind of where my head's at. Again, I'm not balling out of control, but I have a little bit of money. Me and my lady have a little bit of money. And most of our liquid cash is in banks. And we're looking at this nonsense going, I don't want my money in the bank. So what do we do with it? Now, I'm not one to just run out and go do something hasty, or just to throw it all in the crypto. But I'm trying to figure, again, I'm not the smartest guy on the planet, but I'm just trying to figure out what the hell my other options are. Real estate's weird. I would like to see some kind of correction in the market. We're definitely not seeing it where I'm at, and especially not going to get a correction if the Fed stops raising interest rates. And that was kind of the double-edged sword too while looking at real estate. Do I buy something completely at the top of the market? Because again, we have not seen any softening out where I live, and interest rates are just going higher. Now, normally you would see a compensation to where if interest rates are climbing, the market's going to soften and there'll be a correction in the market. We haven't seen it. It hasn't started happening yet. And I don't want to go buy a house that, like, for example, let's use some arbitrary numbers. If you bought a 200 during the 3% interest rates after COVID, if you put $10,000 down and had good credit, got a 3% interest rate on a $200,000 house, your mortgage was right around $1,000. Now, with interest rates being double, that same situation would put my interest rate or my mortgage at $2,000. So if the market eventually does correct 3 years from now or whatever, or 2 years from now or a year or whatever, I am completely upside down in that house and my mortgage is absolutely insane. I can't put a renter in it. No one's going to rent that house for $2,000. It's just concerns. So again, what are our options? If you don't trust the government to keep your money sound, and you don't trust the banks to keep your money safe, what else do you go into? It's not buying into Bitcoin or gold expecting it to pump or to be some kind of investment. It's a hedge to keep your money safe. Not to sound cliche, but quote unquote store of value, right? But that's enough. Let me just get this article read and get you guys out of here. I don't want to waste too much of your time. All right. The Galaxy Digital CEO predicts tough times ahead for the United States economy, but continues to be bullish on crypto. The United States is headed for a credit crunch, and now is the right time to buy gold, silver, and Bitcoin, says Galaxy Digital founder CEO Michael Novogratz. We are going to have a credit crunch in the United States and globally, Novogratz said in an interview on CNBC. Also, another reason why I'm afraid to take out a mortgage. The entire U.S. economy is built on credit, on debt. If we have a credit crunch, you are fucked. All right. You want to be long gold and silver. You want to be long Bitcoin, he said. Speaking on CNBC's Squawk Box on March 15th, Novogratz noted that banks typically rebuild capital by lending less, meaning that a credit crunch is imminent, noting that indicators like the commodities market are already pointing to a recession. The U.S. banking industry fell into turmoil this month when Silvergate Bank, Signature Bank, and Silicon Valley Bank all collapsed in the same week. Moody's downgraded the U.S. banking system outlook to negative. Novogratz told CNBC that a reversal in interest rate policy was in the cards, saying that while the Federal Reserve would like to do a dovish hike for credibility's sake, doing so would be a huge policy error. Alongside his prediction of tough times for the U.S. economy, Novogratz expressed a bullish sentiment for crypto, saying, "If there was ever a time to be in Bitcoin and crypto, this is why it was created." That's how I feel. In that governments print too much money whenever the pain gets too great, and we're seeing that. I agree. We should have done these rate hikes 10 years ago. I know it sounds crazy, but I challenge you to go read a book by Tony Robbins called Money Mastering the Game. When he dropped that book, in that book, he was talking about how we're overdue for a correction. We're overdue for rate hikes. And they just kept propping up the market. All right, the price of Bitcoin dipped after the collapse of Silicon Valley Bank last week, but managed to reach new 2023 highs of 26,514 on March 14th, according to CoinMarketCap. And they ended this article with a tweet. Okay. Looks like Bitcoin is moving on from its risk asset days as more and more people begin to understand its fundamental value case. The market is slowly turning to Bitcoin as a digital form of gold. Yeah, guys, let me know what you think. As well as if you're more, I'm assuming a lot of you are smarter than me. I'm not a super intelligent guy. All I do is get up here and read the news. I'm not like giving you amazing advice or anything like that. I'm not giving you any advice at all. I'm just giving my opinion. But what are you guys doing? Please, I'm not only am I curious to hear it just for a conversation's sake, but dude, I'm running out of ideas. I'm scared. I'm not gonna lie. Let's look at Bitcoin before we bounce out of here. Still below 25. That is a monster number, y'all. Let's look at it on the 15. Oof. Rejected, rejected, rejected. Fake out. Rejected. 25 is a monster. Yep. That's it, guys. That's all I got for you today. I appreciate your time. I appreciate you watching if you're still here. So, per usual, if you do enjoy the content that I provide here on Boring Crypto IO, please, 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 please subscribe to the channel. Turn on this little bell over here for notifications so you know when I do post a video. Please watch the videos. Like the videos if you do like them. Share the videos on all your social channels. Guys, and I'll see you bright and early. Oh, wait. I probably won't see you guys tomorrow. It's St. Patty's Day and I'm Irish. It might be a shit show. We'll see. I might do a video, I might not. Either way, I'm out of here.